I'm Alex Mozed, and welcome to Winner Take All, everyone. We had a little bit of an extended wait time there. I apologize. But without further ado, let's talk GameStop. Funny story. I was actually supposed to go on Bloomberg last evening and talk about there's earnings weeks. Earnings week here. You got Apple. You got lots of tech monopolies here releasing their earnings. Then last minute they wanted to talk GameStop, and at the time I didn't feel that it was entirely appropriate for me to go on Bloomberg and talk about the GameStop situation. The area that I think is really relevant to platforms and what we talk about on the show, which is basically the constant battle between large tech monopolies and traditional incumbents. And what's happening here with GameStop, if you haven't heard, or if there's just too much stuff going on, you can't really capture everything that's going on because every hour there's a new development here. But basically, here's the thing. This all originated on a platform. This all started on a platform. And what platform is that? That platform is Reddit. Reddit, I've talked about many times on the show, how they have wielded the thought police stick, the censorship stick way too aggressively. And what we are seeing is, sure enough, this stuff started on Reddit. I'm going to talk about how it started. And they have actually already taken punitive action against the subreddit called WallStreetBets on Reddit, which is a lot of, where this story begins. They have now, I guess, since reinstated that community with, some guidance on what they need to do to play by the rules. I mean, these aren't rules. It's just they make them up as they go. So here's what happened. You have these investor communities. The media will call them retail investors. Okay. That's kind of a nice way of saying that these are individual investors. They don't have hedge fund money. The connotation that goes along with retail investor is also basically a negative connotation, which is that these people, they're not really well informed. They're not very sophisticated. These are retail investors. Okay. Common thread here is that big tech needs to shield the sheep who don't really know what they're doing, who are misinformed, who can't think for themselves. And as a result of that, the big tech needs to take progressive action to shield them from these fools from hurting themselves. And so, we've seen that now with Reddit essentially taking the subreddit offline. Now they've reinstated it because they came under a lot of pressure for that, which is a completely ridiculous decision, the wrong decision. And the reason why they took it offline is because these retail investors in the WallStreetBets subreddit, they basically said, oh, wow, look at all the short activity on GameStop. And then they said that, basically it was overextended. The shorts, the short sellers had gotten too aggressive. They had opened themselves up too much, right? They'd overextended themselves. So they spotted this as an opportunity to buy a lot of GameStop stock, and then that will drive up the price. And then particularly if you buy the stock in a certain way, so some places allow you to buy stock, but then that stock can be lent out to short sellers when they need to cover their positions. Short sellers, particularly, you have shorts and they have contracts, they expire at certain times, you need to cover your position. So you can buy stocks and hold them and not allow the stocks to be rented out, which helps the short sellers cover their positions to just rent your stock, right, at the close. And then you can buy stocks that allow the renting. So if you buy your stocks in a specific way, it is advantageous because it hurts the short sellers, right? So this community said, we're going to buy a bunch of GameStop. We're going to drive up the price. We're not going to allow the stocks, the stock we're buying to be lent to the short sellers to cover their positions. And we are then going to force the short sellers to cover their position. And what does that mean? Short sellers need to now buy more GameStop stock to cover their positions. Now you force the short sellers to actually become a buyer of the stock, kind of like the thing they don't, the exact opposite of what the short sellers are trying to do. And so this is what happens And this is what has happened over the past couple of days here, where you went from, a stock price at, $1.45 shooting up to $350, actually at a peak here going to $470. And now it's back down to $193. So it's still up from where it was by about 35% at $195. What has also happened is you've now gotten Robinhood has halted trading of GameStop. Why would they do that? This is exactly what we're getting into today, where this GameStop situation has rapidly evolved into now a representative example of the elite, the powers that be, taking advantage actually of the retail investors. And Robinhood and Reddit, Robinhood not being a platform, but still a large tech player, right, to let you trade stocks, synonymous with retail investors. And Reddit, are trying to protect these completely unsophisticated retail investors, which actually, clearly landed a couple blows on these allegedly sophisticated hedge fund short sellers, right? So the unsophisticated, retail buyers now are essentially, being branded as these market manipulators. When in reality, and we know Elon's tweeted on the subject here, short sellers historically have been the ones that are the market manipulators and are the bane of the existence of many CEOs that have publicly listed companies. So I'm going to show you a couple interviews here and we can dive into it. One thing before I do that, so if you actually go and you browse, the actual Reddit community, there's a couple interesting posts here. You want to talk about nefarious activity. Here's a post. Citadel reloaded their shorts before they told Robinhood to stop trading GameStop. Okay, who's doing the market manipulation now? This guy posted that there's actually now a class action lawsuit. And I looked this up. It's actually true. A class action lawsuit has already now been filed against Robinhood. Here it is. This is actually, the filing, which was filed on January 28th against Robinhood for shutting down the trading activity on GameStop. So imagine if you actually use Robinhood and you own GameStop shares. Now you can't do anything with the shares. So Robinhood is clearly actually disadvantaging these retail investors even more by preventing them from selling shares if they have it, or getting in or buying if they want to buy. So it's all done under the same veil, which, and this is, I think, is the connected thread here, the same veil of big tech needs to protect the common individual in America, or more broadly, the globe, right? People can't make decisions for themselves. They don't know what they're doing. They're inept. They're not sophisticated. These unsophisticated retail investors, we need to shield them from losing all their money. When in reality, it actually is entirely the other way around. And that is not just an Alex Moazed opinion. It's actually echoed by some people that have a few more zeros against their net worth. Like, where are you? Okay. Chamath. So let's watch some of this Chamath interview here on CNBC.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, like, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. And I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of WallStreetBets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world?
That overextension of the shorts, that is what this WallStreetBets community was latching onto, right? They're saying, oh my God, the shorts are overextended. They've shorted more shares than exist for the company. So let's go buy a bunch of these shares and squeeze the short sellers. Doesn't really sound like a bunch of unsophisticated retail investors to me that need protecting and can't think for themselves.
I have a hard time believing. I mean, you suggested that there's, a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be...
He says not to disparage the people that are making the trades, but he's literally disparaging them, right? It's saying, well, not to disparage you and say that you don't know how to do fundamental research, but you can't do fundamental research. But I'm not trying to disparage you, but I actually am disparaging you.
There's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund.
That's exactly the position that the media, that Reddit, that Robinhood is not only portraying, but acting upon. Retail investors, the people in the WallStreetBets community, the people that buy and sell stocks on Robinhood, they can't do their own research. They can't do the same fundamental analysis that hedge fund analysts can do. And we need to protect them because if we don't, they're going to harm themselves and others.
The reality is there are fundamental momentum investors in the market that are organized capital, i.e. hedge funds, and disorganized, loosely affiliated capital, i.e. WallStreetBets. And I think what you're seeing is the push and pull of that. And the realization should be that if every person was forced to publish their fundamental research, it would be hard to distinguish the best version of research from WallStreetBets and the best version of research from a hedge fund. They don't have an edge.
Love it. I mean, there's another 25 minutes of the interview. It's a great interview. But let me shift to, another perspective on this from Davey Day Trader. What's his, what is it? Something global trading. I don't know, whatever. Don't quote me, but Portnoy is the man here. Here's what he has to say.
Okay, emergency press conference time. There's a million things. This is like my 8th emergency press conference in 10 minutes. WallStreetBets, the Reddit thread, the Reddit page that largely responsible for the madness right now in the stock market with GameStop, AMC, NOK, NOK, shut down. Shut down.
That's Nokia, AMC movie company. Okay.
I don't know how it happened, but shut the suits. The people in the ivory towers got to Reddit. Reddit shuts them down. Are they doing anything illegal? No. Are they doing anything illegal? No. Are they playing within the rules? Yes. Is it just the fat cats and hedge funds don't like people, the everyday retail bro with their money, even though they'll with your money? Yes. That's exactly what it is. But here's the thing. And let's be clear, I let it ride. I have like over $1 million in AMC and knock. Getting hit a little bit right now since they took out Wall Street Bets. I'm not saying it because I own it. I would buy more right now. I may buy more, even though I already get a shit ton. That's like how much I want to risk. But I know internet psychology. You can't stop the internet. I don't know what's going to happen with Wall Street Bets. It should come back. You should be able to censor what is just people saying, buy this stock, buy that stock. You shouldn't be able to do that. It's criminal. It's gross that they got rid of it. It just shows you who you, I, and everyone else is fighting against. The suits and the fat cats. But I know internet psychology.
Also, big tech. But yes, we're with you, Dave.
I think tomorrow will be the biggest day we've seen yet for AMC, knock, and GameStop. I think you're going to see a big you to whoever took that out. I would bet, well, I already bet. I got $1 million on it. But I bet tomorrow they rise up, and the stocks that you've been hearing about, AMC, GameStop, NLK, knock, Nokia, I think they're going to explode. And it's going to be a big you that you can't stop this, and it's going to make what they want 1,000% worse. This now could go on forever. That's honestly how I feel.
Well, you can feel, his energy there is very similar to the energy that was on this show, over the past few weeks, as we have seen, right, just insane thought policing, tech censorship, and we've talked about on the show, right? We're in information warfare. This is kind of information fascism that's going on. It's completely not okay. And unfortunately, this is nothing new. This has been going on for years. It is now the ante has just continued to be upped. And I think this is going to get worse. We are going to see censorship happen more and more and more and more. It is now becoming more commonplace. Where now you're seeing it just spill over into GameStop trading because, I don't know. I don't even know what Reddit or, what is the justification for this level of censorship, right? There isn't even a good excuse. I'm sure someone has an excuse, but the excuse isn't good. It's not even close to good. And it's completely ridiculous. It's going to have ripple effects across, the trading community, and I'm sure much more to come on this. But again, there's just yet another story of big tech platform censorship, the feigned kind of story that people can't think for themselves as a mechanism to regulate and censor, and there's more of the same, unfortunately. Another favorite topic of ours is Twitter. So what did Twitter do recently? Their stock jumped up because of this news, I guess. They bought a company called Revue. Basically, it's for people that have businesses where they blog, they have a newsletter. And Substack is really the leader in the space. Substack has raised a little over $20 million. Revue, I think, has just raised a few $100,000. So this was a tiny, kind of like an acqui-hire. I mean, yes, they acquired Revue and the assets and the business and this stuff, but I mean, it is a baby acquisition. While I like the direction, strategically, it makes sense to me. I've been a critic of Twitter's inability to really bolt on other complementary platform business models, and which you've obviously seen who are today the large tech monopolies, Facebook, Apple, Google, Amazon, and Microsoft, have platform conglomerate status. We talk about that a lot on the show. Twitter is not a monopoly. They're not a platform conglomerate. They have one platform business, which is not that big relative to the other content and social media monopolies. Twitter really hasn't done much in terms of business model innovation. They tried to do their live streaming, their live video streaming platform, and then they kind of tabled that shot up, and then they kind of got rid of it. It's been mired in mediocrity. I've dinged the management team over there as really being leaving a lot to be desired. And you see that in the results. You see that in them having flat growth in terms of engagement Q3 of 20 compared to the year prior. Flat user engagement. Not a good thing for a tech business that's supposed to be a growth company. Anyway, what do I think of this acquisition? I think it's more of the same. It's mired in mediocrity. Why do you buy the small company that has raised a few $100,000 when the leader in the space, the one that has the most gravitas, the one that has the best creator network, the one that has the best product capability, they've raised $20 million. Twitter's got a $35 billion market cap, something like that today. Even if you buy Substack for what? At most, let's say $150, $200 million, let's say, and you give them a nice earnout structure and upside and all. Buy the leader. It's not a huge leader in the space, but they're clearly out in front of everyone else for a reason. And and if anything, you now just let someone else buy them instead of you. So you could go invest all this money. You already have to play catch up out of the gate. And then, well, what if, a myriad of other content platform companies that are out there swoops up Substack, Substack being the leader. So yeah, I like the direction, but the execution, as we've seen with their other business model innovations, it's just not good. So, yeah. Am I surprised? No, because I don't think they have a good team there, and they've made a bunch of other blunders. And I think their next quarter, we'll see how they try and sweep this stuff under the rug because, technically they'll probably be reporting engagement from Q4, right? Which won't have seen really the huge exodus. But I think if they really are honest to shareholders in that quarterly update, they're going to have to disclose any material impact to the business that they see, even though they're not fully reporting on, say, January 2021 in this quarterly Q4 earnings update. But their business is damaged. And whether or not they care to update investors on that in their earnings release, Jack Dorsey has already hinted at the damage in some of his disclosures so far. There's real damage happening to that business, and they're really vulnerable. They don't have monopoly status. So closing out, last topic here is it's an interesting article that came across, talking about China and the U.S. faces a reckoning over trade disruptions in 2021. This is supply chain law firm forecasts a rise in reshoring automation as businesses look to trim dependency on the manufacturing powerhouse. We have covered on the show about bringing manufacturing back to the United States, and that the way to do that is through automation. And how can technology, some marketplace business models, some platform business models, but all of them technology businesses, maybe not all platform businesses, but all of them technology businesses. How can technology businesses really help accelerate this resurgence to try and bring more manufacturing back to the United States? We covered earlier in another recent episode that 75% of the new sellers on Amazon are Chinese sellers, right? These are Chinese factories. 75% of the new sellers on Amazon, Chinese factories. We've got a lot of work to do to try and bring manufacturing back to the United States. So this article I thought was pretty interesting. And there's a few takeaways in here that I wanted to highlight. Process of reestablishing import and export routes with China will be paused because of the new year. And it talks about the Biden administration trying to figure out what these policies are going to be. And that ultimately is going to bring more uncertainty to supply chain as it relates in China. And that only puts more pressure on U.S.-based manufacturers or importers that are relying on supply chain in China to make some decisions here, right? Closing out here, I thought was pretty relevant. So these combined issues make it harder to predict Chinese policies in 2021 than in past years. U.S. companies remain dependent on the nation as the sole supplier of certain goods made nowhere else, such as technology components like LED, computer, and television screens. In response, some businesses are trying to shift production to other nations such as Taiwan and Vietnam in a China plus one strategy. Well, that makes sense, right? Cheap labor. How can I get cheap labor? Not in China. Let me go to Vietnam. But experts say those smaller nations often lack sufficient logistics infrastructure, such as deep water ports, rail networks, and warehouses. Oh, okay. Interesting. They also simply don't have the manpower to replace China's vast labor force, which include 4 times the U.S. population. Okay. Instead, a more likely solution would be for U.S. companies to replace their trade routes through reshoring, the relocation of foreign supply chain facilities back to the U.S., and here's the key part, and increased investments in automation. So I think this is a big opportunity. We've talked about how I think we see this happening in medical supply manufacturing. There's a lot of emphasis. You got a lot of forces really driving huge urgency to bring more medical supply and medical device manufacturing back to the United States, particularly with these more regulated products. You have electronic and non-electronic medical supplies and medical devices. So you tend to have higher margins, and that could make it a little bit easier, both from an economic standpoint, but also a political standpoint, right? Medical, you want to have that back and have that be less of a dependency on China. So there's a lot of forces why I think automation, in particularly that medical supply, medical device arena, is going to be a big bright spot. But more broadly, right, and what this article is getting at is more broadly, it's a lot on the table, right? A lot of things are on the table to say, if you can have strong startups, it's going to come from the tech startup community that's really going to drive this, right? In making material advancements in automation technology, manufacturing automation technology, that if we can see that capability there is the demand. The demand is there, but we need the technology to meet the needs of these companies, right? Maybe net, the cost is still a little bit higher when you factor in it being manufactured in China and then shipping it across an ocean, not a small ocean. But still, net, even if it is a little bit higher, I still think you see a lot of U.S. manufacturers opt for a slightly higher option that is locally made with more stability, less uncertainty, and more goodwill from a marketing and a branding position. We'll see if the tariffs and all of, but then you kind of abstract yourself out of saying, well, what happens if we get back into another tariff war or this or that, right? All that kind of policy uncertainty, you just sidestep all of that. And so there is a price to pay. It's not we're not talking a 20% margin price to pay that you would then reshore back to the United States. But I think there is some margin that companies would be willing to tack on if you have the rest of the automation there and the capability to do scaled manufacturing here as opposed to there. So continuing thread here, we're going to be looking to highlight more of these companies and more of these verticals. We already did a little bit of a deep dive talking about the different areas where we see automation coming forward first or sooner than other areas. And we will continue to dig deeper into that. That is it for us today on Winner Take All. Thank you very much for joining us, and I will talk to you soon.